Good morning, everyone. It's October 2nd today, 2015, and we have another webinar for you at Capital Mind Premium. We have Abhijit Phatak, or AP, as he's popularly known, bringing us a webinar on pure price action. PPA that works. We are going to be hosting this over VisIQ, as you've known, and you might be surprised if you are part of this webinar about why the slides are suddenly coming in. Turns out we've had a little bit of a technical snag. The first part of the webinar wasn't recorded, so I'm just filling in what we talked about again in another filler voice. I want to take you through about 5 minutes of what has happened so far with AP's option trading, which is a special kind of trading that we've been doing at Capital Mind at Slack. And post that, we'll have this webinar on pure price action. It's about trading stocks purely on charts with only price as your indicator. No indicators, no oscillators, no MACD, none of that stuff. Can you make great trades? The answers will come in the webinar, but let's proceed from here on to what we've done so far. We've had AP coming in for about the last 2 months. We've had pretty interesting trades. As you can see, the profits in the first 2 months have been quite significant. The positioning is 75,000 rupees is what is assumed to be invested, 15,000 per position, 5 concurrent positions, and we take AP makes positions that have interesting momentum moves in a very short period of time. So it's not only 5 positions for the whole month, the 5 keep rotating. Sometimes you have 20, 30, 40 positions in a month. 75,000 rupees became 1,33,000 in August. That's a 58,000 rupee profit. Fairly good, very good, in fact. And 75,000 became 94,000 in September. Again, we don't reinvest. We're just using the same rupee amount every time. AP suggests only 15,000 rupees per option, and so that means typically 2 lots in a stock options contract, 4 lots in an index options contract. So this had a profit of 19,000 rupees, and we've had a profit of about 16,000 rupees in the October series. Although we're only 3-4 days into it, this is fairly interesting. The concept of using only options and options charts to trade. Plus, we use Slack for communication. There's no email sent on every trade, for instance, and the logic is provided on the Slack channel. Now, remember that these are only for educational purposes, so obviously you should not take this as recommendations or investment advice, and past performance does not reflect future returns. We do not say that we will do this in the future or that AP will always generate these kind of returns. There could be negative returns, we don't know, and therefore we're not making any guarantees. The equity curves, what happened is it's not a linear upward facing curve. Sometimes the profits come in the middle of a month, a dip from there, come back up. So there is volatility in profitability as well. We can see the 3 equity curves of the 3 months till now. October has only a few days. So we started trading the October series even before the October dates have started, obviously, because the October series is available. But we've had only about, maybe a 10 or 8 or 10 trades in there. What's important to know now is what happens after October. Now we've had 3 months, 3 months, and AP has kindly consented to do 3 months with us. After this, there will be a special product only for options with AP, which will contain his trading room in a way that where he talks about how to find good stocks and maintains this virtual portfolio. We will also communicate the pricing and the details of this on Slack and email. Rest assured, there will always be something special for Capital Mind members. We will also open this out to people who will not be members of Capital Mind Premium than the regular series as well. We'll bring this over to you as soon as possible. We hope you like it. We'd love to hear the feedback. Going forward, AP will now take the webinar forward on what is pure price action based trading. He's going to do this interactively using charts. You're going to talk about what stocks you want. You can just post them in the chat window on the side. AP will then take up those stocks and tell you about how he can use those. He's not pre-practiced any of these stocks. He's just taken a look at them and he's going to go take a look right alongside with you. Feel free to ask questions. This may be a pretty long seminar, but we will keep it active as long as there are questions. Thanks very much, and welcome AP to the show. Please go ahead. Thanks for coming in.
Okay, so when we come to studying charts, the basic thing of technical analysis is the price. I always believe that price is the only thing which is required on the chart, and the indicators and oscillators are only as a guiding tool which is provided by most of the charting software. But what people do is we rely 99% on the indicators and oscillators and just ignore price. Whereas I have seen price action is the final thing, because finally you are going to trade the price. You are not going to trade the RSI or the MACD, or the, with due respect to Deepak, who also uses MACD, but then they have their own place. But what I am trying to say is, as long as you can understand the price action itself, that is good enough. So this is something which I have been studying over quite a long time, and I have realized that once you have a good grip of studying the price action, you don't need anything else. And okay, now to start with, how does one go about it? First of all, you just need a EOD the stocks. That's all, which are freely available at various sites nowadays, or maybe you have your own charting software. So that is also possible. That is number one. Number two is another question which always comes to everyone's mind is, out of whatever 1400, 1500 stocks in NSE, how is it possible to study the price action in so many stocks on a daily or a weekly basis? So that is not required. First of all, what I normally recommend is you should have a small list. Small in the sense, it again depends on your aptitude, your grasping power, how much used you are with charts. If let's say you can track maybe even 20 stocks per day, or maybe 50 stocks per day, there are different people who can track different number of stocks. Or only thing is they should be spread across sectors. Like let's say you are tracking 20 stocks per day, then you have maybe 3 from the banking sector, 3 from IT, 3 from oil and gas, and so on. So that covers the entire stock market. Maybe one large cap, one small cap, or maybe mid cap, maybe in IT, Infosys or TCS, and maybe one Hexaware and Polaris, something like that. So that is what you should do on a daily basis. There are people who have their own favorite list, so you can track the only the. I mean, when I say favorite list, is the stocks which have given results in the past. Everyone has his own list. Everyone has his hate list where the stocks have never given any return. So don't track those stocks at all. So as long as you keep tracking your favorite list, or a list which you can track on a daily or on a weekly basis, you are good enough to start this price action study. Now, one more important thing which people tend to forget is, when you are, this is only purely for cash delivery purpose without any leverage, because the stop loss can be a bit high on this, because it can be maybe to the tune of maybe 15 to 20%, or sometimes even more. I'll come to that later. When we take examples, you will see it for yourself. Now, what happens is, once you have that stop loss, leverage becomes a bit of a tension. So that's why I repeat, this is only for 100% delivery, only long. So in a bear market, you will not be able to get these type of trades. Of course, there will be some sectors in the bear market which typically contrarian sectors. For me, sometimes ZTV or Bharti always give a trade when it is down. I mean, on the long side. So that is the most important thing. Second thing is, there have been some by people earlier, what time frame should we study the chart on? Now, I have a firm belief that the duration of a trade, once you take it, let's say you have taken a trade today and you have seen the daily chart and have taken the trade, it will give a trade from entry to exit for a n number of days, which means duration of a trade is directly proportional to the time frame of the chart on which you are studying it. If you are studying an hourly chart, it will give n number of hours worth of trade in terms of duration of the trade. If you are studying a weekly chart, the duration of the trade will be n number of weeks. Exactly same way, if someone is trading intraday, you cannot see daily chart for an intraday trade. It has to be 15 minutes, not even hourly, maybe 15 minutes or 5 minutes chart. Or maybe nowadays, as some people have started, 1 minute chart. So those are all, the duration of that trade. It can be only maybe let's say you are taking a trade on a 5-minute chart. It will last only n number of 5-minute candles. Let's say 10 candles, which means not even 1 hour. So that is the first thing which you have to keep in mind. If whatever I'm going to explain now, you can do it on even a weekly chart or a daily chart or an hourly chart also. So you have to keep it in mind that the trade which you will just get from that price action study will be directly proportional to the time on which you are going to study. So what I'm going to explain today is only a daily chart, EOD. So it is very clear that once we are studying it on a daily chart, the trade duration of the trade will be n number of days. It can be even 100 days. Fine. I mean every weekly or monthly trade finally initially it starts on a daily chart or maybe an hourly chart. That's fine. But then as long as you are trailing it, it can go on. But you cannot expect a daily chart to give you a multi-bagger for 5 years. That is not a good assumption. But at the same time, if you are studying a weekly chart, the basis is it has to be held for a few weeks. That is the basis of that. That's why big institutions, it is rumored. I mean, there are some people who vouch for it. Always look at weekly charts. They don't look at daily charts or not even any smaller time frame. They always look at only the weekly chart because their holding time is more. They are not into like not like us where we can get out in 10 days or maybe 1 week. So the basic principle of this price action is identifying swing. Just ask a quick question. Does everyone understand the concept of a swing high and a swing low? Yes, once you trade on a daily chart, you should not look at it on a intraday basis at all because the stop loss will be on the basis of a daily chart. Sometimes, okay, you can have to place the stop loss intraday, no doubt about that, because you cannot place the stop loss in the evening. It has to be intraday. So only for that purpose you have to look at the intraday price. Okay, I'll explain the concept of swing high and swing low, which is the most important thing in a price action trade. A swing high, let's take the swing high first. A swing high is a highest point on that chart which has not been crossed for quite a long time. I mean, if you are looking at a daily chart, for a lot of days that high is not crossed and price keeps going lower, is what is a swing high. Maybe it can go 10%, 20%, maybe 50%. So that becomes a very important swing high. Sometimes, for example, right now I'm showing you, can everyone see the Tata Steel chart over here? I'll just zoom it a bit. Oh, sorry, zoom out. If you look at the high which it made in the month of May, here, which was a high of 384.5 on 6th of May. After that, that high has not been crossed at all. I mean, if you just go ahead on the chart, it came slightly closer to it on 11th of May, which was 381, but after that it has just gone down on a daily basis. After that it made a small low, it gave a small retracement which can be called a pullback. But after that, that 384.5 became a very important swing high. But that is now how many, 4 or 5 months old. After that, if you see this low, which is on 16 June, that becomes a good another swing low if a recent swing high has been crossed. But then as long as this 384.5 is not crossed, this swing low will not become a swing low. Then it gives a small retracement and it makes a high of 316.7, which is on 23rd June. And then the price starts going down again, and the previous low, which was on 16 June, which is T1, is broken on 29th June. It made a low of 287.4. After this, this swing high of 6th May loses the status of a swing high, which was a small retracement high of 23rd June, which is 316.7, becomes the next swing high once this previous low has been crossed, breached. I mean, the price goes lower than. That is how to, sorry, marker. You can't see the chart? Okay, initially this was a swing high. Once price starts drifting down all the way to mid-June, it gives a small retracement, makes another high, but this high is just a pullback high that assumes more significance only when this low, which is this previous low in the month of on 16 June. Once that is breached, then this high becomes a swing high and this high loses the tag of a swing high. So this high becomes a swing high, which is 23rd June 316.7. Is it clear now once I draw these circles? Okay. So same way, the price of Tata Steel, I mean, there are a lot of people who talk about buying Tata Steel, it is good on a long-term chart and all those sort of, a lot of people have been talking about Tata Steel nearing long port, but unless you see the first sign of some buying happening on a daily chart, there is no reason to buy it on for a delivery. So let's come to the picture now. Now what has happened is between 24th August, the 25th August low, which was 200, and now 29th June. Okay, this chart is not updated till yesterday, it is only till 30th. And the low of 29th September was 199.7. So, okay, a lot of people will start calling it a double bottom. Yes, a double bottom, technically, I mean, as per the textbook, a double bottom is not just same price lows. A double bottom has definitely needs the confirmation. The confirmation is actual double bottom can be said only when this high is crossed, which is 243.5. So by the traditional technical analysis way, a double bottom, right now we will call it a potential double bottom, but it becomes an actual double bottom only when 243.5 is crossed. So that is what is a swing high. So right now, if you can see from the chart over here, this 243.5 has become a swing high because it has gone on further, and once tomorrow, or not tomorrow, sorry, in the next few days, maybe few weeks, only when Tata Steel crosses 243.5, that will become a crossing of a swing high, and that becomes a delivery trade, and then this double bottom is confirmed. So you can say, it is, people will say from 200 to 243, it's already at 20%, but then that is what, that is the confirmation you need. You can't always keep on do bottom fishing, because then you have seen Tata Steel has been in a downtrend for so long. A lot of people must have bought all the way from here to here, and they must have, it must have hit their stop losses. So this is the way to identify. So I'll take some quick examples. Let's take any suggestions? Motherson, okay. Okay, now on the chart you will see Larsen here. I'll start with Motherson. On the chart you will see two panes. On the top side you will see only a price chart. On the bottom pane you will see I have got this table from the KPL site, which is quite a good site for anyone who follows technical analysis. There is a red line which is appearing on the price chart, if you can see it. That is nothing but a swing. I mean, you can define the n number of days in that. So I have identified 5. This is good enough to identify the number of days for a swing. It was not adjusted for the split or bonus or whatever it was. Now, if you take Motherson Sumi, if you see the lower pane, there is a figure of 258.2, which is the last 5 days high. Now, okay, people will say on the long-term chart, Motherson Sumi has a good support at 225 to 230. In fact, I myself have shown this long-term support to a lot of people. So that can be a good place to buy, but then unless it crosses the 258.2 high, which is also the swing high, because if you see this 58.2, which was on 24th September, unless it crosses that high, it cannot be said that it has taken a long. Just a minute, there is someone on the phone. 1 minute. sorry, I'm back. This concept of 5-day high clear on the chart of Motherson to me. Right now it is in a sell mode where the 5-day high, if you can see from the line, it is constantly going down. Once it went below this support of 335, after that it has been, the 5-day high has never been crossed since last almost 2 months now. If you take a slightly, I mean, if you go back on the chart, let us see how Motherson Sumi could have given a good delivery trade in the past. I mean, if you see from, let's take from start of this year, January. Okay, I'm in January. Here in the month of December, it had made a low of 262.6, which was on 17 December, and this high was the previous swing high, which is 300 on 19th November. So what essentially this price action tells is, once this previous swing high of, because after that the low was made and then this high was crossed, which is 300. So once it goes above 300, which it did on December. So you have to keep an eye on the previous swing high being crossed. So once it crossed the swing high on 18th of December, it becomes a buy above that 300 level, the previous high, with a stop loss of the recent low, which was 262. So that is what I said, buying above 300, it can be even 301. So buying at 301 with a stop loss of below 262, let's say 261, which is a 15% stop loss. That is why I always say it has to be cash delivery only, no leverage. So even then 15% stop loss on a delivery trade is bad. So let's see how the trade progresses. Once you buy above 300, for the time being the stop loss is 261. Then it makes a small low. It again, once this high is crossed, which is 303. This is crossed on this day, on 31st December, and 1st January it made a high of 309. And then this becomes a base on the chart. If you can see, there are lots of bottoms on this, one here, 2, 3, 4. Automatically the stop loss of this 300 and this high of the buying day, which is 303, has been crossed and it closes above that. The stop loss can be brought up to this base, which is around 282, 283, so below 282. So automatically your trade becomes that much safer. So buying above, what we did was bought at 301. Initially the stop loss was 261. Then once it crosses 303, the stop loss is now 282. So basically it is still in loss in terms of stop loss, but the stop loss has become only 18 rupees now, which is just 9%. So initial stop loss of 15 to 20% has become only 9%. And then over the next couple of months, the stock made a new high, but again came back, but did not breach that 284. In fact, the low was 284. It did not breach 280, and then it went up again. So the next time it crosses this high, which is 325, which is well above our price. Let's see when it crosses. So it has crossed 325 here. No, in fact, it was a same high. It came down a bit, and on this trade, which 31, 9th March. So once this 325 is crossed on 9th March, this can be the previous low, which is this. The low is 292. So that means the stop loss comes that much nearer to the cost. It is still in loss in terms of stop loss, but instead of initially it was 261, then it became 282. Now on 26th February, low is 292. So your buying is at 301, low is 292. So your stop loss is only 10 rupees from the buying price. It goes on. Finally, it goes all the way to 356 high. Now there are two ways. One is you go all in and remain all in with the stop loss, which is stop loss. Other way is you have to define your own rules. I mean, it can be any kind of rules. Like for every 10% or 15% increase in the price, you will book 25% or 10% of the holding. Those rules can be, defined by every individual. They cannot be fixed rules. But let's take, even if it, a simple rule like for every 10% increase, you will book 10% of the holding. So once you buy at 300, 301, once it reaches 330, the higher 339 and one at 10% you book 10% of your holding. So automatically your stop loss becomes that much safer. and then here again it becomes 356, which is almost 20%, and then it comes all the way down to 289. So now you can say, this is a tricky thing. I always believe on a stop loss on an intraday basis. I don't agree with the stop loss on a closing basis, because what if it crashes 20% after breaching the stop? You cannot wait for closing basis. That is my view. I mean, there is no correct view. It's just an individual preference. The closing basis stop loss has its own dangers. Okay, on this day it breached 289. I mean, the sales stop loss of 290. So our stop loss got hit. So we got out at cost almost. This was one trade in Motherson Suzuki. Now let's take Maruti. I'm starting everything on in January 2015, so that it's easier to understand. I mean, let's not. In fact, I'm not taking my own stocks, because you'll see that I have taken the best stocks. So let's take your stock, so we can understand. So in January, December, Maruti made a low of 3250, and the high was 3440. So automatically this has become a swing low, and once this 3440 is crossed sometime in January, which it did on 5th January itself, so it becomes a buy above 3440 with a stop loss below this, which is 3240. So a 200 rupee stop loss is what? Just 7%. It was a very good. You are not comfortable with echelon EOD basis, because let's say your stop loss is, I'm just giving an example. Let's take you were in Amtech with a stop loss of, I don't know what it was when it crashed, but I think it was some 180 when it crashed. Let's take your stop loss of 160 on a closing basis, and it crashed all the way to what, 50? There is no way you can hold on till 50. There has to be an intraday stop loss somewhere. I mean, it may not be 150, maybe a bit lower, but then there has to be a stop loss on an intraday basis. That is what I always give the examples of Satyam and Amtech, because that closing basis plus loses its meaning when you have the stock. Is it clear to you, or some more examples need to be given? Okay. Yes, buying the breakout of a swing high, and the last swing low is the stop loss. So in Maruti, the high was 3440. We bought. This is again cash delivery. If someone wants to do it on futures, the stop loss can be okay. Here in this case, the stop loss was not that bad, only 6 to 7%. So when you have a good stop loss, you can think of buying futures. I mean, there is an individual choice. But then that again depends what kind of stop loss you have, because that stop loss is purely given by the chart. There is no other reason for the stop loss. It is the swing low, which is 3240. If you have a 200 point stop loss, I think Maruti lot size is 125. So if you are willing to lose 30,000-40,000 in a futures trade, you are free to do that. But then let's say the stop loss was 3,000. I mean, it could have been 15%. Then it becomes dangerous to trade futures. So the question of trading cash or futures is purely based on, but that's why I'm giving examples of only cash trades and futures at all. So here we buy about 3440 with a stop loss below 3240, just 7%, and then this base of 3240 is never breached, even when it makes a new high, which is 3758. It comes down again to 3360, again crosses this high, so automatically the stop loss moves to 3360, which is still in a, but at the same time it has made a high of 3745, which is almost 10%. So you can think of partial booking. And then if I take the chart forward, this 3360 was never breached. Even though here the low was 3386. So 3360 remains the top 3 months, because it has not closed above the previous swing high. It has not crossed it decisively. So then it finally takes off after May, and then we can start look at increasing the stop loss. So here now it has broken out decisively over 3700. So the high is 3873. Then here again it has crossed the high, which is 3890. So now the stop loss can move to this swing low. I'll just mark a line here. Here. It is 3520. So now the trade becomes in profit. You have already booked No, I don't look at volume. There is no need to look at volume because unless there is volume, the price will not move. I mean, what finally, whether it is, if the volume is only on a single day basis, the price will not keep on moving the next day and the days after that. It will automatically come down. That's why volume, that's the reason I said it is only simple price action, no indicators, no oscillators, nothing. So Motherson Sumi, we saw it as an example. After January, it gave a small trade of 5%. And Maruti is giving, it seems, is giving a brilliant trade. So now the stock was moved to 35.20 and then it again keeps on making new highs. So automatically, once this high is crossed over here, this high is crossed here, the stop loss is moved to here, which is 36.75. So you can just look at the trade buying at 34.40, booking partial.
You're out. I'm hoping the Karnataka power supply situation has not happened, gone to Pune. Yeah, his mic is off, so and the screen is not coming through. One second. One second. EP. 2 minutes. ठीक है, ठीक है, ठीक है. No problem, no problem. ठीक है, Karnataka power supply has gone to, we have successfully migrated it to Pune. So AP is going on backup and coming back. This is really not the weird situation that we should be having in India. I mean, we have an excess of power. Power plants are running. I mean, I know this is an option space and all that. It's a little bit of macro fungi that power plants are running at less than their capacities, and we have no power. So life is very complicated. I don't know who's getting power, but this is strange. Well, Kunal, you definitely have excess power, but we seem to have in India as well for right now. As in, uh, Sunil, I think Kunal meant India has slight excess power in terms of what is happening in the power situation. Like GMR, in one of the notes, I haven't yet put out that mail. GMR actually went downgraded to default and came back up. The situation is they have two power plants. First, they were cribbing that they're not getting coal. Uh, so they were kind of working with the government. They got uh, coal, and now they're saying that it's not viable to produce at current prices. So it's our fun now. Tejas, this is an end day look back. Yeah. So if you look at a high low, yeah, imagine it's like a end day high low, 5 day rolling high low window that you actually oscillate it. So, for instance, if you cross over the swing low, now your swing that you need to care about is the swing high. And then when you cross the swing high, the next swing that you need to care about the swing low. So it's like a single line. So it's not two lines. At any point in time, you're looking at the other side. So you're bullish and looking at the down, or bearish and looking at the high to see the value is off. Yeah, I think AP is not using a mic. Sorry, a microphone. I will get this sorted out. But what that particular thing does is this. Awesome. Okay, AP is on. AP, are you here? Sound gone? Oh no. Okay, here you go. I think AP should be here.
Can you hear me now?
Yes, I can hear you, AP. Can everybody else? Okay, hand it back to AP. AP, the screen's not on.
Yeah, but can you hear me? Yeah, is it clear now? Okay. So I just gave this Maruti as an example and it came from you. So it's not that I had done some homework on the Maruti chart. So, okay, some questions on Tata Steel. What was it? Let me scroll up and see the question. 1 minute. Okay, in Tata Steel, yeah, but once we are looking only at the recent swing high, we the previous swing high can be used only for some partial profit booking. That doesn't, I mean, that doesn't mean we should book everything. You use some previous swing high of 268. Can you hear me? Okay. So, is that answer on, is the question on still answered? You talked about the previous swing high of 268. I forgot who asked it. So I think there is no reply. Maybe he has gone offline or his question is answered. So if you go back to Maruti, after buying at 3440 and now the stop loss is which is 3900 low, which is on 8th July. What is the rationale for shorting? Okay. Okay, don't mix the options trade with these cash delivery trades. They are completely different. I mean, that was a, see what you have to understand is even within this swing of this whole swing which you can see here in Maruti, there have been short-term small trends, small downswings which we can catch in a put, I mean, a put buying or even shorting futures. So that is one pattern which, okay, if you want, I can share the options chart later. You should never mix options trade with this price action trade, which is purely on a daily chart. Is it clear? Okay. Before the stop loss, which was 3900. Now here all the way the stop loss has moved to the recent swing highs and another here. Now what has happened is on 24th August the stock gapped down. Although the high itself was 44.52, but you must remember one thing: we are long from 3400. It's already, if you see the high was here, it was 46.92. So from 3400, this has given a trend all the way to 692, which is 1200 rupees, almost 35% in 8-9 months. So this is one. So in any case, we have, as I said, every 10%, 20%, 30% we have booked. So maybe we are holding only maybe 70% of our earlier holding. So initially, at the end of this trend, the stop loss was 44.16. It opens below the stop loss, so we get out immediately. This is where the importance of stop loss on an intraday basis comes. Because if we had waited for the close was 42.41 on 24th August, whereas the stop loss was below 4400. We would have lost something like 160 rupees if we had waited for the close. So as soon as we see a price breaking the previous swing low on even at 9:16 a.m., just get out below 44.16. As you see here, the stock opened itself at 43.50, went to 44.52, again came back and closed. So somewhere in that region you have to get out. What you might not be a trader who looks at the price every now and then, but there has to be some time you can look at the price, maybe at 9:16, maybe at 10:30. Sometimes even if you are working somewhere, you can always have a coffee time or something where you look at the price. And then the other way normally is you put a stop loss in the system at 9:15 yourself or calling the broker. That is also important. So here that would have skipped, but then you can always change the stop loss and trigger exit at market. Is this Maruti trade clear? So basically buying at 34.40 and finally exiting around 4300, 4400. Okay, any more examples you want? That is the best way to explain this from the actual chart. Larson, okay. Now as we go through charts, it will be very clear to you some rules which need to be formulated. Now one rule which is very important is the stock. When you look at a stock, can we try some non-trending? Yeah, I give examples. Yes, I'll go to Larson right now. One more important thing when you look at a crossing of 5-day highs, before that the stock must have a downtrend of at least something like 10 to 15% in the price. I mean, it should not be a stock which has gone sideways. It should have fallen considerably to the extent of 10 to 15% from a previous swing high. Only then you should start looking at this kind of pattern. That is number one. Number two is, even if it has not crashed, even if it has fallen, let's say 10-15% and has consolidated over the next 10-15 days, that also qualifies for a swing high buying. Why I am saying this is here you see let's go back to January, because we are starting everything from January. Now here in January you see Larson was the previous swing high in December was 1546. And the low was 1450. So as soon as it crosses 1546, which it did on 5th January, it made a high of 17. We buy at 1547 with a stop loss of 1450. So about 90 rupees stop loss, which is not bad. Again, only 7% stop loss. And then just observe it on a day-to-day basis. As long as the low initially does not go below 1450, it is a hold. Once this high, which is 1571, is crossed here, the stop loss can be moved. Initially the stop loss was here, then this stop loss can be moved to the next swing low, which is here. I just mark the price on the y-axis. You can see the price on the over here on the right. So that is the stop loss. It becomes 1776, and then it goes all the way to 1750. It bought about 1546, it went to 1750, which is 200 rupees rise, which is what, almost 10%. So here automatically you have to book profit. So now the swing low, problem is this has trended so fast from here all the way to here, from 1500 to 7, almost 200 rupees. There is no way you can increase the stop loss. That is one small downside on this. So either you can keep a 5-day stop loss for a partial quantity, like here. And finally you get stopped out over here. So here if you can see the lower pain, the 5-day high low held here, even when there was no very important swing low or swing high on the stock. Other way you could have held on to here with the stop loss here and again it has gone up. So either way you can still be holding on to the trade, but what is more important is you should not make a loss in the, because finally it has moved up from 1500 to 1700. There is no way you should hold on to the 100% of the quantity all the way down. Who knows, it might break the previous low also. That is something which you can't predict. Now, if you look at Larsen again after that, here you would have got stop loss, stopped out maybe at cost somewhere. But then again, this is the more important thing why you should have your list of favorite stocks. Let's say you are tracking Larsen very closely. You will never miss a trade in Larsen. So there will be a period in a year, sometime, if you see any chart, I mean, any good chart, any good stock, always gives a run of 30 to 40% at least once or sometimes twice in a year. If you see this trend which we got, that way Larsen will do it at least 2 or maybe 3 times in a year. So that's why you should take every trade which comes with it. Now here, if you see from May, it has given a good trade if you identify this as a swing high, which is 1626. So once that is crossed, you are in at 1620, it goes all the way to 1864. Again another 200 rupees on Larsen, which is another 8 to 10%. And Larsen is a large cap stock. It doesn't move the way small cap do. And now here you would have got stopped for the final quantity here. So right now Larsen is not a buy, although you will again ask why we are holding the call. But that is again only a completely short term call. Nothing to do with the daily trend of 5-day high or a swing high. Any more examples? A lot of examples. Okay, TCS. To be honest, TCS has done nothing for the last so many months. See, as I said, the first thing to identify such a stock was the stock should have fallen considerably from a swing high, which is okay. Let's go to 2015 January here. So if you see in January, of course, this part you don't know that it is going to do this. I'll just hide the chart after January. Now here in December it made a high of 2840, sorry in October, and in December it has come only to the low of 2400. So if you remember the first rule which I said, the stocks would have fallen considerably initially before that swing high, after the swing high, which is to the tune of 10 to 15%. So TCS does not qualify for the swing high trade at all in this whole of 2015. Yeah, it is sideways. But then, of course, that time we did not know it was sideways, but then the basic condition that the stocks should have fallen considerably to the tune of 10 to 20% was not met. That's why this trade was avoided completely. HCL Tech. Okay. Sorry. HCL Tech sideways for the last 2 months. It has given a trade in January. And you're doing it going back to January. So if you see this period from December to January, this high of 800 on 19 December was crossed on 16 January. So on 16 January it becomes a buy above 800. Let's say 801. So either this low which is 725 or this low which is 746. Either of these can be a stop loss, which is again 50 to 60 rupees. Not bad, 7 to 8%. And after that, HCL Tech has gone up considerably from January all the way to this high of 1058. So from 800 it has gone to 1060 in 3 months, January, February and March. 260 rupees. So again another 25 to 30%, which is in 3 months. And then you get stop loss below this below this swing low, maybe here or here. Is this concept of swing low clear? Because I am just marking the stop loss here, but if you were attentive when I explained it, that is all you need to see for a stop loss. So you are out of the trade in sometime in March or maybe in April at a price of 915. So this again gives, if you take the average, if you take the partial booking plus the final stop loss, that is something which one has to define for himself. There is no fixed guideline for that. So 1058 to the high, then final stop loss of 913. So even then, for the complete quantity, you still have a return of 15 to 20% in a period of 3 to 4 months. Any other stock? Someone said sideways. So TCS was on sideways. Any other non-trending stock which you can think of? Yet was trending. Okay, CET is a good example. Now, if you see CET from November, from here all the way to June, it was in a sideways to downtrend, definitely not up. So, if you see the high in on 12th November, it was 1010, and it came to a low of 595. So, it's a massive fall of 30% in 6-7 months. So, it becomes a good candidate to buy for the next swing high. If you just look at this part from June, as I said, okay, people can call that stock as oversold, but again, when you say oversold, it is something which needs some definition. That's why I have created this 10 to 20% fall from the previous swing high. So now it is very clear to you, once it crosses this swing high, or this swing high, let's say 802 or 689, it becomes a buy automatically above that, let's say at 700, and the stop loss is 600 initially, then it goes up to 620, and you have to just keep on changing the stop loss as the price goes up, because CET was again similar to last one to grow or some other stop loss just keep changing, and you have to just hold on to the stop. Maybe booking partially is a better option. So maybe you could have got stop loss here below this, which is 1100. Still another 30% in just maybe 2 months. In 2 months, we have got 30% on the CET cash. M&M, okay. M&M made a high of 1433 in August. After that, it made a low of 1100 in. All this time it was not doing much. So I mean, the fall was not good enough for us to take a trade because it was not 20% previous swing high. So it doesn't qualify for a trade at all. No, initially I explained this. These trades have to be purely cash without any leverage as a basic rule. But if you are lucky enough to get a very good stop loss, I forgot which example, it was Maruti, where the stop loss was only 6%. That is your individual decision whether to take a trade in futures, because 6% was something like 200 rupees in Maruti. With a lot size of 125, if you are comfortable enough to take a trade with a stop loss of 200 in futures, you are free to do that. But typically, another problem with futures is you have a list of only 150 stocks, whereas you can have a list of stocks which are not in futures, which can run sometimes, like for example, mid cap. When there is a mid cap rally, stocks go 30, 40, 50% in a month. Generally, stocks in F&O don't do that as a rule. Mid cap definitely do that quite a lot. Reliance, without even looking at the chart, I can tell you it did not qualify for a trade at all. It did, but that was 2014. In 2014, it has not yet qualified for a trade. Because if you see, the high was 1120 in. After that, it has been a continuous downtrend. Okay, here you can have. Okay, you can say in A, I'll show you the trade. Above this thing, So Reliance now, if it crosses above the previous swing high, which was 99.5, so let's say 900. Once it crosses 900, it will be a good trade with a stop loss low, recent low, which is 815, which is about 85 rupees. Okay, 10%. 10% for a cash delivery is a good stop loss. Now here there is another thing which again is a rule which cannot be hard and fast rule, but that is again up to the individual. Let's say you have an amount of 2 lakhs or 5 lakhs of this kind of trading. You should always allocate something like 1/5 for every stock. So you should be open to trade 5 stocks at a time. Let's say you have 5 lakhs. So you allocate only 1 lakh per trade. Which means, let's say you get one trade in one stock now, your 4 lakhs will remain idle. You should not put everything in one stock, because who knows, it might end up maybe it will end up sideways and you will not get a good trend at all. So that's why, let's say you wait for the next trade from a different sector, and that you will immediately identify how the sector rotation happens in the industry. It's easy for the people on TV to say, but once you keep on following 20 or 30 stocks across sectors, it is very easy to understand this sector, these 2 stocks from this other sector have crossed the 5-day high, so the uptrend is there in that sector. So automatically, once you have that balanced cash from that 5 lakh portfolio, which is of which only one is used, you automatically get into the other stock instead of putting everything in one. Any more questions on the basic concept? I mean, if that is not understood, then the whole purpose is defeated. I think so. That is for because
Actually, I haven't even tried all the indicators over there.
actually this 5-day thing is only something which I have additionally put here just so that it becomes clear visually. But you need not have it. I mean, you have to just identify the swing highs and swing lows. That's all.
Cool. The regular charts are there on Snap. We don't have intraday charts, but daily charts have been there. They go all the way back to 2004. Pharma, Cadila Healthcare.
This one would have given an entry based on these rules. This one. But if you take from theory, I just zoom this. If this one was on your favorite list, what kind of trade would it have given? So here there was one trade. Once this crosses this high, it went let's say from a high of 135, it went all the way to 190, which is about 60 rupees. In what, 40%? And then you got stopped out at about 150, which is still not bad. Then it fell all the way from 190 to 120. So it is a good correction in the stock. So it qualifies for the next swing high. Now in the month of June, if you take this as a swing high, or if you follow the 5-day high which was crossed, if you look at the lower pane, the 5-day high was crossed above 139 on 10 June. And then after that the stock has not looked back. So let's take as an example, buy above 139, the previous low is 126. So just a 10 rupees stop loss by buying above the 5-day high with a stop loss of 125. It has not broken the swing low at all. This was the swing low first, then it becomes here. So buying at 135, you are still holding it. I don't know what the price yesterday, something like 350, 360. It's almost a 3 bagger in 3 months. RP Industries, or drugs. I think we're talking about RP Industries. If it has just run up quite fast, like some of the stocks we have, like Dishman or Maruti, only problem is your stop loss becomes far away. That is the only problem here you have. For example, if this one you had not entered at 135 and you saw it only at 150, the stop loss still remains 125 till it creates a swing low for you to go and enter. So unless if it has formed a good swing low after that, after the first entry, you still can do that. But until it forms a new swing low, a previous swing low which is 125. If you are comfortable with entry at 150 and stop loss at 125, maybe you can go enter with us maybe a smaller quantity. No, it is not possible to screen. Maybe you have a filter of 5-day high and you can employ that filter. I don't know whether it is on Snap. In AmiBroker it can be done. Otherwise, as I said, you should have a list of favorite stocks of 20 or 30 spread across sectors. Spread across sectors is the most important thing because you cannot have 20 banking stocks. Because if banking is not doing well, you will not get an income, which is the case in this year, 2015. So if it is spread across sectors, banking, IT, oil and gas, whatever you have, then you will definitely come up with some trade idea at least once every couple of months. Let's say a list of 20 or 30 stocks, maybe 3 or 4 per sector. Problem is if you keep screening it, then you'll end up getting too many trades and you don't know how much capital to employ in every trade. Yes, why is mid cap? Even small cap. Should I give an example of JP Associates? What are those purple down and green up arrows on the page? Yeah, those arrows are only the swing high, 5-day swing high and 5-day high and 5-day low have been broken. That's the only indication those arrows give. Let's take JP Associates. So if you see JP Associates has not given a trade at all, it has okay, 5-day high was crossed, but the swing high was never crossed. It made a double top here in January, February, that's all. After that there was no crossing of a swing high. Any other mid cap or small cap? I mean mid caps, let's take Elliott Waves. But just looking at the chart, let's not get into the actual entry point because the analysis will lose time. If you look at the chart of Elliott Waves from December onwards, I have got it on the center of the screen. From December, it crossed the high of 229, 230 sometime in January with a low of 190, which is about 20 rupees stop loss. For a mid cap, that is the problem. The stop loss, initial stop loss can be high. But from 230, it went all the way up to 330. So almost 30% in 4 months. Well spun granules. Oh, granules has some stock split, I think. Don't know, I don't know. No, granules did not qualify for anything from January to July. But then after July, if you see this trade, it crossed the consolidation point, let's say from 88, 90 onwards. It gave a good entry above 90, let's say, with a stop loss of 74. And the trade gave a good 30-40% in granules. Another thing is, it looks very easy when I explain these charts, but then I have been observing this pattern for the last donkey years. So it's not that you will be able to identify trades immediately, but of course I am here to help if you have any trades in the future for any specific stock you want. But then the most important thing is to get used to this needs hours and hours of experience observing on charts. Like once you make your own list of 20-30 stocks, you should keep on observing them on a daily basis. And automatically you will pick up such trades. I think this was enough for the introduction of the topic because the question and answer can go on later on Slack. But unless there is something more important, you can ask me here. Please talk about RRG. No, RRG is a completely different concept altogether. That gives a relative strength between various sectors. So again, as I said, once you have a list of 20-30 stocks spread across sectors, this 5-day high itself is good enough to give you the sector which is going to be stronger in the next few weeks. You don't need RRG for that. Do we consider structure like round bottom, etc.? See, rounding bottom is fine as long as you are, so far as you are experienced in observing chart. In any case, even a rounding bottom finally will break out above the 5-day high. Rounding bottom is a good pattern to look at, but then finally it has to give a trigger above the 5-day high or the previous swing high to give an entry. Yeah, once you have a rounding bottom, there is a hint that this might give a trade in the coming days. That is a cautioning point. DLF, okay. Now, if you just take the the current trend of DLF, if you see here, it crossed the 5-day, sorry, it crossed the 5-day high here, which was 119. So it gave an entry above this high, which is 119.5. So right now, currently, it is in a buy mode. With a, if you look at the 5-day low, it is 121. So right now, your stop loss is at break even. So you could have entered DLF at 100, above 119.5. The high it made yesterday was, I think, around 138, 139. It has already gone up by 5 to 7%. With the stop loss now, since the stop loss is 121, it is at cost. You will not lose anything. Suzlon. Okay, Suzlon has not done anything for the last. Here it could have given a brilliant trade in January. I'll just go to January. Okay, from October, it was around 25. It went all the way down to 10. It was a sizable decline in the stock. Then, since we are talking only about December, January, here it crosses the previous swing high of around 15, 16 rupees. I just mark a line here. So this 16 is crossed. So you buy about 16 with a stop loss initially below 12, which is not bad. It goes further up. Your stop loss is, after buying it at 16, your stop loss then comes to 13, and then it goes all the way to 31. It's almost double. It is exactly double actually. And then your exit is somewhere here. This is the stop loss, which is about 24. It is still not bad. Buying at 16, booking partially at 31, 32, final exit below 25. That is the trade Suzlon could have been. And that is the beauty of it, is once you observe this pattern, that the stock is gone sideways now. So as per this 5-day concept, this has formed a good base around 18, 19, which is the reason why I have been talking about Suzlon is a good long-term buy right now. So the next trigger, which is here, above 22.5, that becomes a buy for a trade in Suzlon with 18 as a stop loss. Looking how did you come to a level of 2300? This is a weekly chart of Lupin, where it, in fact, just as it was breaking out that day above 1925, I had given a call on Slack. If you see the trend line, it was crossed, it was just above 1910 for this week, and the next week it was, I think in future it was 19. This is a cash chart. This is one trend line, and this is the base, which is around 1600. So 1600 and 1920, 300 rupees, 350 rupees. So that is how it's a triangle breakout. So around 2300 is the target. This is how it's a simple pattern in technical analysis. Any other stocks? We saw RP, we saw Fiat, we saw Dishman, Sun TV. So let's take it from January. Here in December there was a trade above this high, which is 335, 335. It went all the way to 450. After that, it has been, so right now the Sun DB actually is already in a buy mode. So if you see the decline from 400 to all the way to 350, almost 60% decline. So automatically it qualifies for the buy above this, which is 300. So to be safe, right now the above the recent high, which was 380.5, Sun DB will become a delivery buy above 381, with the recent low, which is 335 as a loss. No, weekly chart, the breakout was, I was looking at a weekly chart, but the breakout was on a daily or even an hourly chart. See, as I said, the first thing which I said, a trade is directly, the duration of a trade is directly proportional to the time frame which you see it on. So which means Lupin gave a breakout on a weekly chart, which means the trade can last a few weeks. Unfortunately, the good thing is Lupin has given almost 60-70% of the target in just 10 days. That is a different thing. No one can predict that. I don't have hourly charts here, but Lupin gave us why even on a daily, the same breakout could have been seen on a daily chart. See this, the same trend line, the breakout level will remain the same, that will not change. Earlier I showed the breakout on a weekly chart, now this is a daily chart. Any more examples? Otherwise, examples with charts or examples in for the subject itself. I think this is a good enough food for thought for the next few days. So if it retests, then it's a buy again Lupin. Yeah, as long as it doesn't close below the trend line. Yes. So the stop loss will be below the trend line. Do stocks usually retest after they go? Only the stock knows that. No one can answer that question. Impossible to predict. For example, Lupin, I'm sure a lot of people would have been waiting for it to retest that line, trend line in the next couple of days. But it has just. If PPA is so simple, that is the problem. It is so simple. That's why people don't use it. People always want complicated things. I'll show you an example of PPA on options. This is Nifty futures. I'll show you some option. Let's take this is October. So Nifty to October 7700 call. Okay, now there is a difference between in trading in cash delivery and in options, because options, as you all know, it is purely based on momentum. So it cannot be done on a daily chart. Options to me has to be done on an hourly or even on a 15-minute chart. It gives good trades. I'll show you an example on a thing. This is 15 minutes options. So if you just look at the 7,700 call, if you just look at the price action here, it opened gap down that day above the See again now here once you are looking at the 15-minute candle, you are looking at the last 5 candles of 15 minutes. So here the moment it was crossed this high of 220, 219.5, it became a buy with a stop loss of the low was 195, which was not bad. Buying above 220 with a stop loss of 195, and if you see where it went all the way, the first surge took it to 270. So automatically you can book maybe one lot or something. It came down, the next surge took it to 360. What more do you want? Okay, this was a good trend. But then this is what options is. Everyone knows that. It can be done on 15-minute options. Yes. If you take yesterday's example of Sun Pharma. This Sun Pharma is a call which we are trading right now. In fact, I posted this chart also. It gave a breakout about 20. The initial stop loss was 14, which is not bad. And then even now it is still in a buy mode. After giving a breakout about 20, right now it made a high of 35.9, and now it is still at 31.75. In fact, I have given away a secret. Most of the trades which are given options are on this basis. I can see a lot of people typing, so I'm waiting for questions. Volume, the stock will come down immediately, and that is the reason I said this price action should be done on stocks which have a good daily average volume. Look at stocks which, for example, where the average volume is only 10,000, 20,000, and suddenly it goes to a couple of lakhs for a few days. There has to be a average volume, good volume on a daily average basis. Only those kind of qualify for this pattern. Sun TV talk a bit slower. Sun TV cash, which chart? Okay. Yeah, what is there you want to see in this? No, once you make your list of favorite stocks, as I said, 20 stocks, 30 stocks, 50 stocks, whichever number you want to, you select that those stocks and put it in a list only on the basis of volumes. It can whatever the daily average volume should be good enough, and there should be no false volumes. Like I have seen so many stocks which have a daily volume of less than 10,000. Suddenly, a couple of days, the volume goes to 2 lakhs, 3 lakhs. Those stocks should be avoided. Sun TV previous swing high and current SL for it. If you go strictly by the 5-day swing rule, right now it is above the 5-day low. So it is, in any case, it is in a buy mode with the stop loss of 349. So the 5-day low is 349, which also is what I am looking at, because it is also the 200-day average. And if you see the monthly chart, that is also the last month's low. September low, sorry, it is 330 weekly low. Yeah, 349 is the last week's low. So if it goes below 349, then we are in trouble in continue. And as the moment it crosses 381, then it will be a very good trade. Not only options, even for cash delivery.
Now, so I'm going to
Yeah, I think it's done.
ask for last questions.
False breakout? No, unfortunately, no. Maybe as I said, one of the signs of a false breakout can be from volume. If the stock we're talking about does not have good average daily volume, suddenly there is a surge of 10x, 20x in volume. That can be a sign of false breakout. But otherwise, impossible to predict whether the breakout is real.
Tejas, are you or is this better? Okay, just a quick, the summary. I think, and maybe I mean APM. I may have missed something, so just do correct me if I'm wrong. Uh, the idea is to identify swing highs and swing lows. The idea of a swing high is just basically a high that has been made that is one second, I'll just extend the session a little bit so that we get it in. A swing high is something, or a swing low is an N day, which is 5 day, 10 day, whatever is, or 5 period, 10 period if you're using shorter time frames or longer time frames. You use the high and the low to determine the range, the swing, last swing high and the last swing low. The breaking through of a swing high results in a bullish trade. The breaking down below a swing low results in a bearish trade, with the other side as the stop loss. Your time frame given in days will, you'll need to continue to see these swing highs and swing lows in the context of the daily chart itself. So if you switch to like an hourly chart, it may not be applicable. Correct me if I'm wrong here, AP.
Yeah, in fact, one more additional thing which I want to say, if you follow hourly charts, you can get excellent trades in futures even for going short.
So the same strategy used on an hourly chart to go short to find some short strategies on futures. So similarly, just use a hourly chart for a future, a swing high, swing low. Maybe instead of 5 period, use the period probably could be what, 6.5, so 7 hour period, which might give you an indication of a quick short term move. Okay, Arjun has a question. Okay.
No, I've already answered.
So sorry. Okay, there you go. Okay, brilliant. Okay, the other important thing over here is I guess, see, some things that I guess I still have to do some more work on this. It sounds very very interesting from a perspective of the strategy. I think guess a little bit of it also comes from the ability to read charts over a long period of time, and immediately perhaps you mentally also easily establish swing highs and swing lows on a chart, not only in the past but also going right now. For instance, in the chart that's open Sun TV, it's very clearly the swing low is here, and it's very clear that what you're looking at is the swing low for a stop loss, because but perhaps right now if you were to say can I take a trade on it right now, you wouldn't go long yet, because there is no swing high breaking or a swing low breaking. Correct me if I'm wrong there.
Yeah, yeah.
Got it. So we'll let me try and summarize this, Francis. I think what I'll do is I'll try and bring this together. This post will end up being a little long because we'll have to show a lot of charts. We'll try and do this. Yes, I think Arjun, that's the point. When you look at, I think AP's ability to read charts is so far superior that it kind of he can plot in his head the points at which a chart will break down and a chart will break out by just looking at the numbers, and he'll say, okay, this is a trade, this is not a trade. For us, we'll have to mentally process the rules and then only say, okay, that. So it sounds a little fast for us, but I think the idea is to keep looking at them and then eventually you'll get it. Rajesh, we'll create another portfolio perhaps on price action. We could, I mean, both eventually are momentum because they are literally breakouts based on chart and technical criteria. In momentum portfolio, what I do is I add an extra layer of a little bit of a fundamental check, because I'm very scared of getting a Castex in the portfolio. So not that I won't get it, but it's the point is, it's just been a little bit of a scary thing to ensure that we don't pick up this thing. What I think is very important is we should create something that has price action. I think the options portfolio that AP has is a reflection of perhaps price action as well. Like he
Yes.
just said, he uses that. Sorry.
And that is the reason why it didn't do well in August, because there was hardly any good long options trends because of the high VIX.
Yes. And I guess even there, what would happen is because of the high VIX, the time delay every day would take away so much from the option that it would kind of negate the breakout on any chart.
Yeah, that's why the options were not trending.
Trending, correct. To the downside also. It's quite interesting actually, because this will also mean that your external factors like volatility impact the ability to take long option trades.
Yeah, but that is what I always say. It finally comes down to charts. It was there visible on the chart that this will not. I didn't even look at VIX, but it was there on the chart that this will be a bad month for long options.
True. But yeah, but even then, I think August was a good month. 53,000 on 75,000.
One thing I can add is, even for those people who do some kind of fundamental analysis, this additional analysis also will help you time the entry. I have seen a lot of people say, I'll buy this stock, for example, Hindalco. A lot of people are buying it right now at 75, 80, 70, whatever. Without even, they say, okay, we'll wait, even if we go to 40. But this kind of action will help you go into it only when it shows momentum.
Great point. I think chart reading is a skill one can acquire over time. So I would recommend it in any way. I think there is no one rule that works for everybody. So you have to find what works for you. But it's important to get exposed to all different kinds of strategies to find out what works and what doesn't. So if this strategy somehow does not gel with your trading style, then there's nothing to worry, because it's not like saying that this is a bad strategy or something else is a good strategy. It all is different. If in the end it's the bank balance that is your report card, right? So cool. Chandra, that's Bharat Forge Tech and Fundamental. I haven't gone back that level. I think yes, it did, because I got in the first time we got into the stock was at 500 plus, I think. Abhishek, yes, charts every day would be a necessary deal if you don't trade every day. Think of yourself as trading weekly, then just look at the weekly charts once a week, or even the daily charts once a week. The difference being, if you're looking at a daily chart once a week and you're expecting to place a trade and then go away for another week, your stop losses may be hit intra-week, which is the only problem. Otherwise, taking longer time frames is not a problem. When you do longer time frames, all that changes is the level of the stop loss that you might have to take. Because usually stocks that move are not in very compressed zones. Okay, so you end up with this 15, 20%, 25% stop, which you have to take. But obviously the returns are also 100, 200%. So the weekly time frame has a different sort of return risk profile. But in the end, it comes down to money management and the ability to not panic intra-week if you're taking the trade. For instance, on Black Monday, if you're taking a trade on Friday and you wanted to wait till next Friday, there was a pretty bad Monday in August, right? So that would have spooked you. So the idea about that is find that the discipline to not look through those trades at those time, or if those things happen, then you have to be quick and nimble and say, okay, we'll check the charts, we'll take our trade, and if the stop loss has been hit, I'm going to take it and move on. Sometimes this kind of strategy may not work for persons who will have a lot of extra, will not be able to devote time to those markets at all. So if you say I only have time on Friday, or I don't have time on Monday to Thursday, this may not be for you.
Yeah, but what you can do is, if you are already in any stock based on this strategy, you can always note down the 5-day high and 5-day or the swing high and swing low, and just keep a track of that. No need of looking at the chart and studying the chart.
But at the end of the day, they'll have to look at it, I guess, no, to re-update the 5-day values.
Yeah. Yes, it works on all kinds of stocks.
In the end, your charts will reflect a lot of news. I mean, we'll get news about Dishman like 3 days from now. The chart told us this a lot earlier, but sometimes, maybe it's a function of India, but it's a function worldwide that news flows to different parties at different points in time. Therefore, they act earlier and they tend to
Yeah.
take
Like for instance, on the rate cut day, Bank Nifty shot up 10 minutes before the rate cut was announced. Last.
Yeah, that's true. That's a. In fact, I remember when we were, when I was doing some algorithmic kind of trading and we were looking at trading beyond, we were trading in that time the inflation used to be announced at 11 o'clock. I think 10:57, my indicators, I got 8 short bank trades.
Yeah.
So we were like, okay, what do we do? I mean, I was so concentrated, but we took them all. And after that, this thing is flashing on the screen saying, inflation came very high. And then we were looking at each other and saying, boss, whoever is carrying this information has stopped by his broker and then carried the information to the TV screen. So it's pretty interesting. But sometimes, and I can guarantee this, if there is a big government order going to a company, the chances of it not being leaked, I think, are less than 1%. People will know. Investment bankers working on large mergers, they have friends. They personally may not be trading, but things happen.
Yeah.
Uh, so these sometimes this has been detected in the US also, where there was a European guy who didn't know that this was illegal in the US, but he knew about a deal that was happening because of his it was his customer, and he went and took a very large call option trade on one particular stock. This was 1980 something, so 90 something. So it was the SEC caught him and he said, I had no idea this was illegal because I had information. He was my customer, he told me. So then, then they returned the money and all that. I mean, it was like $5 or $6 million that they earned on that one trade. So, um, but yeah, I mean, I think quite interesting from a charting perspective. So thanks, AP. I think that was a brilliant session. It's a little long. We'll try and compress the video a little bit. I think and I hope that we've got a recording. This is a fantastic session. Different ways to trade. All of us use, some of us use indicators, some of us use, pure price, like AP talked about. I think what it'll do is improve our trading styles to incorporate pieces of this in what we look at. Um, great to have you again, all of you. Thanks very much for coming in. If there are any questions, please use the Slack room. They will be trading resumes on Monday, so we should have a pretty good set of weeks. October is going to be volatile.
And don't worry about Dow.
And don't worry about now. It has no relation. Don't even worry about SGX. It doesn't tell you anything. Yeah, it's only our charts that tell you anything nowadays. And happy trading. Thanks for being here. Have a wonderful weekend, everybody. Cheers.
Right.
Thanks, Adrian.